Welcome back to Explain the Charts, everyone. Today, September 23rd, 2025, we're putting Intel Corporation, ticker symbol Intel, under the microscope. We'll start our in-depth analysis by examining the daily chart, looking at the broader picture from May 2024 right up to the latest closing prices. As you can see, the past year has been a true roller coaster for Intel, with major swings between highs around $32 and lows below $18. The overall trend since April 2025 has been a significant uptrend, pushing the stock from its 52-week low to recent highs. However, this upward momentum has been punctuated by periods of sharp decline and intense volatility, which is a hallmark of Intel. Just a few months ago, in July 2025, Intel released Q2 earnings showing flat revenue and operating losses, leading to a workforce reduction and project cancellations. This news, reflected in the chart around late July and early August 2025, initially caused a significant dip, with the price falling from the $23 range down to around $19. Now, let's correlate recent news with the daily chart, focusing on two pivotal events that fueled Intel's journey from mid-August into September 2025. Around August 25, 2025, approximately 21 days before the September 15th news, the U.S. government announced a nearly 10% equity stake in Intel, investing $8.9 billion by purchasing shares at $20.47 each. This strategic investment provided a substantial vote of confidence and acted as a strong psychological support level, helping the stock consolidate and eventually push higher. Following this, on September 15, 2025, Intel shares jumped over 4% after the company lowered its fiscal 2025 cost outlook and finalized the sale of a majority stake in its Altera business for $3.3 billion. This strategic divestiture was seen positively by investors as a move towards financial discipline, driving the stock from the mid-$24 range towards $25 and beyond. Let's zoom in on the specific period around these news events on the daily chart, from early August to mid-September, to observe the price reactions. Transitioning to the 15-minute chart, we can clearly see the dramatic events of September 18, 2025, which saw Intel hit its 52-week high of $32.377. Around 10:57 Universal Time Coordinated on that day, a massive surge occurred, sending the price soaring from around $25.22 to an intraday high of $32.377 within a very short period, accompanied by extremely high volume. However, this euphoria was short-lived, as the stock experienced an immediate and equally sharp rejection, closing that same 15-minute candle significantly lower at $31.80. The market beat news from just 4 days ago perfectly captures this mixed sentiment, noting that while an Intel-NVIDIA partnership made headlines, a $13 billion problem still lurks beneath, signaling significant underlying issues and renewed sell-side pressure. This dramatic candle, reaching the 52-week high only to be heavily sold off, established $32.377 as a formidable resistance level. Subsequent 15-minute candles on September 18th and 19th show a continuous downward pressure, confirming the strong bearish reaction that followed the spike. By the close of September 22nd, the stock had dropped to $28.76, indicating that the near-term turnaround mentioned in the news is far from certain and that the market is currently weighing the structural challenges heavily. Expanding our view to the 1-hour chart from early September, we observe Intel trading in a relatively tight range before the explosive movements of mid-September. From September 2nd to September 10th, Intel mostly consolidated between approximately $23.70 and $24.80, with occasional minor breakouts and pullbacks. This period of relative calm reflects the market digesting previous news and preparing for future catalysts, which indeed arrived with force on September 18th. Currently, on the 15-minute chart, after the significant drop from the $32.377 high, we see the stock struggling to find solid footing. Immediate support is currently tested around the $28.73 mark, which was the low of September 22nd. Should this level fail, the next significant support could be around the $27.39 level, which was a previous 52-week high in February 2025 that was breached and then retested. On the upside, immediate resistance is found around $29.50 to $30, representing recent intraday highs from the slight bounces during the current downturn. Let's revert to the daily chart to discuss the broader bullish and bearish arguments for Intel. On the bullish side, Intel's strategic moves like the Altera divestiture and cost-cutting initiatives aim to streamline operations and improve financial health, seen as positive long-term indicators. The government's $8.9 billion investment at $20.47 also underpins a strong institutional belief in Intel's future at that price point, making it a critical long-term support. Furthermore, subsidiary Mobileye's strong Q2 2025 results and raised full-year guidance show growth in specialized segments, offering a glimmer of hope despite Intel's overall struggles. Conversely, the bearish arguments are compelling, particularly given the stock's sharp rejection from its 52-week high of $32.377, indicative of powerful selling pressure. Intel's flat revenue and losses in Q2 2025, coupled with workforce reductions, highlight persistent structural challenges and execution risks that worry investors. The intensified competition in the AI chip space, with NVIDIA's massive investments, also poses a significant threat to Intel's market share and future growth prospects. Key price levels to monitor include the formidable resistance at $32.377, the immediate support at $28.73, and the critical psychological support at $25. The government's entry point at $20.47 is a major long-term support, while the 52-week low of $17.665 represents the ultimate floor observed in April 2025. To recap, Intel is currently navigating a highly volatile period, trading around $28.76 after a significant spike and subsequent pullback. Important price levels to watch are the immediate resistance zone between $29.50 and $30, and the crucial overhead resistance at the recent 52-week high of $32.377. On the downside, key support levels are $28.73, followed by the robust $25 level, and the government's investment price of $20.47. Looking forward, a bearish continuation, potentially retesting $27.39 or even $25, has about a 50% likelihood, especially if there's further negative news on Intel's turnaround or increased competitive pressure from NVIDIA. A period of consolidation around the current $28.70 to $29.50 range is moderately likely, at about 30%, if there are no major news catalysts and market sentiment stabilizes. A swift bullish reversal to rechallenge the $32.377 high is less likely in the short term, perhaps only a 20% chance, requiring unexpected positive earnings or a breakthrough product announcement. Traders should closely monitor upcoming earnings reports for operational updates, any developments regarding Intel's strategic partnerships, and changes in analyst ratings, as these will be crucial indicators for future price movements. Remember, Intel's history of extreme volatility means rapid price changes are always a possibility, making risk management paramount. That wraps up our analysis for today. Thank you for tuning in to Explain the Charts, and we'll catch you next time for another in-depth market breakdown.